Top ETFs across asset classes. This article was written by Stephen Kress, Quant Team. Global ETF assets surged 30% to $15 trillion in 2024, with U.S. markets attracting over $1 trillion in inflows, demonstrating unprecedented investor appetite. ETFs offer investors several advantages, including diversification, lower costs, liquidity, tax efficiency, and a wide variety of fund exposures. Seeking Alpha's quant system evaluates ETFs through 5 key metrics: momentum, expenses, dividends, risk, and liquidity, providing investors with actionable insights for ETF portfolios. A portfolio of ETFs in different asset classes can help to minimize risk. SA Quant has identified 7 top quant-rated ETF buys or strong buys with solid factor grades. I am Stephen Kress, head of quantitative strategies at Seeking Alpha. I manage the quant ratings and factor grades on stocks and ETFs in Seeking Alpha Premium. I also lead Alpha Picks, which selects the 2 most attractive stocks to buy each month and also determines when to sell them. 2024 was a landmark year for ETFs. The popularity of exchange-traded funds, ETFs, reached new heights in 2024, with record-breaking growth in assets under management and inflows and over 1,700 new fund launches. Global ETF assets climbed by more than 30%, reaching $15 trillion, while U.S. ETFs alone attracted over $1 trillion in inflows, underscoring the increasing popularity of ETFs among institutional and retail investors alike, total global ETFs, and U.S. net assets under management. Since 2003, ETFs, in addition to diversification, offer investors several advantages, including lower costs. Their expense ratios are typically markedly lower than those of mutual funds, and they are tax-efficient investment vehicles. ETFs also provide investors with significant liquidity by trading on an exchange and diversification, which reduces risk across a bundle of securities instead of a single investment. Fund varieties for every investor. ETFs are also appealing due to their impressive variety across exposures. Exchange-traded funds enable investors to access different asset classes, niche investment themes in emerging industries, and alternative investment styles. Some ETFs bundle exposures simultaneously, reducing the complexity and costs associated with building a diversified portfolio. Take, for example, the iShares Core Growth Allocation ETF, AOR. The fund combines a growth investment style with multiple asset classes, including U.S. stocks, international stocks, and government and corporate bonds in a single fund. Seeking Alpha's ETF screener allows investors to easily find highly quant-rated ETFs across several categories to help make informed investment decisions. Seeking Alpha Quant has bucketed ETFs along the following categories. Allocation ETFs. Allocation ETFs typically provide exposure to a predetermined blend of asset classes, helping investors balance growth and risk. Alternative ETFs. Offering investors exposure to non-traditional strategies, alternative ETFs can replicate hedge fund strategies like long, short, or target asset classes that are typically less correlated with the market, like crypto.commodities ETFs. Commodities ETFs, which invest in physical assets like gold, offer a hedge against inflation and diversification benefits. International equity ETFs. International equity ETFs can bundle non-U.S. securities by specific country, region, or level of economic development. Sector equity ETFs. By targeting specific sectors or industries like semiconductors, investors gain focused exposure to particular market segments. Taxable bond ETFs. Fixed income ETFs offer income potential and can help balance portfolio risk, providing lower volatility. U.S. equity ETFs. These ETFs typically track major U.S. stock indices, but can also include any ETF offering broad exposure to the U.S. market. Top ETFs across asset classes. The SA Quant team has identified 7 ETFs with excellent quant ratings and ETF factor grades across asset classes. Our ETF grades differ slightly from our quant factor grades, as ETFs are technically investment funds and therefore need to be evaluated for portfolio-level characteristics like tracking error and liquidity, among others. However, SA Quant ETF grades leverage the same rigorous, data-driven approach to provide an instant characterization of critical ETF attributes. SA Quant evaluates ETFs for the following attributes: momentum, which measures the ETF's price performance against its peers. Strong historical performance can be a highly predictive factor of a fund's future returns. Expenses, which evaluate how an ETF's expense ratio ranks compared to similar funds, are crucial as higher fees ultimately reduce investor returns. This also takes into account a fund's bid-ask spread, which is the difference between the buying and selling price of assets. A narrower bid-ask spread is a sign of market efficiency and saves investors money. Dividend grades, which assess the growth and consistency of the ETF's dividends alongside its yield profile, are crucial for income-seeking investors. Risk, where a grade is derived based on multiple risk factors, including standard deviation, tracking error, and turnover, helps investors understand potential volatility and downside for the fund. Liquidity characteristics, like trading volume and assets under management, impact how easily investors can buy or sell shares at good prices. Top ETFs across asset classes. Based on SA's rigorous ETF factor grades and comprehensive quant rating system, we've identified the following 7 ETFs as our top picks across Seeking Alpha's core ETF asset classes. Bot 1, a Shares Bitcoin Trust ETF, IBIT. Asset class alternative subclass digital assets, ranked in asset class as of 1/27/2025. 2 out of 282 ranked in subclass as of 1/27/2025. 2 out of 46, expense ratio 0.12%, AUM 59.43 billion, quant rating strong buy. IBIT is the number 2 quant-ranked alternative ETF launched by BlackRock in January 2024. With nearly $60 billion in AUM, IBIT is BlackRock's flagship spot Bitcoin ETF. The fund holds Bitcoin, BTC USD, in a trust structure, providing investors with a regulated and convenient way to gain exposure to the cryptocurrency. IBIT boasts an A expense grade, with a bid-ask spread of 0.02% and an expense ratio of just 0.12%, making the ETF an attractive alternative to investors who would otherwise pay hefty recurring fees on crypto wallets or exchanges. IBIT has delivered exceptional price momentum in the last year, returning more than 150%. Powerful momentum has driven strong investor interest, contributing to the ETF's exceptional liquidity. IBIT has a $2.7 billion 3-month average daily dollar volume, which represents the total value of shares traded on average over the past 3 months. That far exceeds the median 1.60 million for all ETFs. IBIT liquidity grade. The combination of IBIT's excellent liquidity and rock-bottom fees makes IBIT a solid choice for investors looking to ride Bitcoin's recent uptrend. 2. Global X MSCI Argentina ETH ARGT. Asset Class International Equity Subclass Miscellaneous Region. Ranked in asset class as of 1/27/2025. 1 out of 451 ranked in subclass as of 1/27/2025. 1 out of 57, expense ratio 0.59%. AUM $1.10 billion, quant rating strong buy. Launched in 2011, ARG tracks the performance of the MSCI All Argentina 2550 Index, providing investors with exposure to some of Argentina's largest and most liquid companies. The fund is concentrated, with only 28 total holdings. However, it is well diversified from a sector perspective, with the consumer discretionary, financials, utilities, and energy sectors all having double-digit percentage allocations. RGT Sector Holdings SourceLink. In 2024, Argentina's S&P Merval Index rose 172%. The main catalyst were economic reforms, expanded economic activity, and investment initiatives introduced by the government. The fund, AGRT, sports an A+ momentum, having delivered 73% on a trailing one-year basis. Argentina has recently emerged from a recession, broadly benefiting domestic companies. Additionally, the fund, which is denominated in dollars, has benefited from peso devaluation over the last year. ARGT has a solid dividend profile, with a TTM dividend growth rate that is close to 450% higher than all ETFs and 9 years of consistent dividend payments. ARGT dividend grade. In addition to solid dividends and strong price momentum, the fund is highlighted liquid with an AUM exceeding $1 billion and a 3 million average daily share volume that is over 900% greater than the SA Quant universe of ETFs. With a potent mix of economic reform and strong sector diversity, ARGT is a great choice for investors looking for international equity exposure. 3. Virtus Reeves Utilities ETF, UTES. Asset Class Sector Equity Subclass Utilities. Ranked in asset class as of 1/27/2025. 2 out of 433. Ranked in subclass as of 1/27/2021 out of 12. Expense ratio 0.49%. AUM $379.47 million, quant rating strong buy. The Virtus Reeves Utilities ETF is an actively managed fund, which is a type of fund where portfolio managers make active decisions around which securities to buy and sell rather than simply tracking an index. UTEs is focused on the utilities sector and the number 2 quant-ranked sector equity ETF. The fund maintains a concentrated portfolio of 19 stocks, with roughly 30% of the fund allocated to Vistra Corp (VST) and Constellation Energy Corp (CEG). Both stocks have seen a meteoric rise in the last year as tech companies continue to build out their AI infrastructure needs, proximal to utilities with nuclear energy in their power production mix. This has helped drive the ETF's exceptional momentum grade, UT's momentum grade. With a competitive expense ratio, UTS offers a cost advantage compared to many ETF peers. The fund also boasts excellent liquidity characteristics, with an average daily dollar volume of $6.85 million, roughly 335% more in the SA Quant ETF universe. This combination of skyrocketing momentum, ample liquidity, and value make UTs a great buy for those interested in the utilities sector. Before TCW transforms SIMS ETF, ENEF. Asset class US, equity subclass large blend. Ranked in asset class as of 1/27/2025, 2 out of 670. Ranked in subclass as of 1/27/2025, 1 out of 194. Expense ratio 0.75%. $368.36 million. Quant rating strong buy. Launched in February of 2022, the TCW Transform Systems ETF is an actively managed exchange-traded fund that focuses on companies positioned to benefit from the clean energy transition. TCW is the number 2 quant-ranked U.S. equity ETF and the number 1 quant-ranked large blend ETF. The fund has a sector focus on technology, energy, and utilities. Nets Holdings. Nets boasts abundant liquidity, with an AUM of $340.42 million and a $3 million average daily dollar volume of $3.82 million, which are 62% and 138% above the median of all Seeking Alpha-covered ETFs. The fund has outperformed the broader market on a trailing one-year basis, returning an incredible 45% and contributing Nets' overall A+ momentum grade. Riding the clean energy wave, Nets has turned the global sustainability push into market-beating returns through a focused bet applicable to U.S. sectors. 5 iShares Gold Trust Micro ETF, IAUM. Asset class commodities, subclass commodities, focused, ranked in asset class as of 1/27/2025, 1 out of 61. Ranked in subclass as of 1/27/2025, 1 out of 41. Expense ratio 0.09%. AUM $1.45 billion. Quant rating. Buy backed by physical gold bars held in vaults, IAUM is designed to provide investors with a simple and efficient way to invest in gold without the need to own the physical commodity. The ETF sports A-range grades across 3 out of 4 categories, with a high average 3 million daily share and dollar volume, and an AUM of 1.45 billionaires. IAUM is a highly liquid vehicle. The ETF is the lowest cost physical gold exchange-traded product (ETP) on the market. IAUM ETF grades. IAUM has seen strong price momentum across all time periods as investors have rushed to hold gold in the recent inflationary period. The fund's annualized volatility, while slightly higher than the median for all ETFs, is consistent with a commodities ETF, which is more vulnerable to supply-demand shocks and seasonal patterns, among other things. As inflation fears continue to linger into 2025, IAUM offers a cheap access point to a solid hedge. 6. Simplify Interest Rate Hedge ETF, PFIX. Asset Class Taxable Bond. Subclass Inflation-Protected Bond. Ranked in asset class as of 27/2025, 1 out of 517. Ranked in subclass as of 1/27/2025, 1 out of 17. Expense ratio 0.50%. AUM $187.66 million. Quant rating. Buy PFIX is the number 1 quant-ranked taxable bond ETF. It provides investors with protection from interest rate increases, which is when bond values typically fall, by simultaneously investing in treasuries and complex interest rate options called swaptions. Additionally, PFIX offers strong liquidity characteristics, with a 3 million average daily share volume and average daily dollar volume of 158% and 234% above the sector median, respectively, fixed liquidity grade. The fund offers investors an A+ dividend grade, with a TTM dividend yield of 3.27%, which is 16% higher than the median for all ETFs. FIX has delivered an incredible 173% return through the rate hiking cycle, delivering on its objectives at a reasonable cost for investors. VanEck Real Assets ETF RAX. Asset class allocation. Subclass allocation 50% to 70%. Equity ranked in asset class 2 out of 76. Ranked in subclass 1 out of 15. Expense ratio 0.77%. AUM $103.80 million. Quant rating by RAX is an actively managed allocation ETF that targets long-term returns while protecting against inflation by investing in other ETFs, targeting real income generating and financial assets. The fund is currently allocated to approximately 50% real assets and maintains the flexibility to allocate according to different inflationary environments. The fund shows strong momentum characteristics, with an A- grade and delivering 19.26% on a trailing one-year basis. RAX also sports a standard deviation that is 10% below the median for all ETFs. With an FWD yield of 1.82%, a diverse mix of real assets, and an adaptive allocation strategy, RAX offers solid inflation defense while delivering below-average volatility performance. Concluding summary. ETFs continued their remarkable growth trajectory in 2024, with global assets surpassing $15 trillion and U.S. inflows exceeding $1 trillion. Seeking Alpha's ETF factor grades evaluate funds across 5 critical attributes: momentum, expenses, dividends, risk, and liquidity. This data-driven approach assesses portfolio-level characteristics like tracking error and trading volume to provide investors with comprehensive insights into an ETF's performance, cost efficiency, and trading characteristics, enabling more informed investment decisions. Seeking Alpha Quant has identified the top ETFs across 7 asset classes to educate investors on SA Quant's ETF factor grades and how the universe of funds ranks among different asset class categories. We have many ETFs with strong buy recommendations, and you can filter them using stock screens to suit your specific investment objectives. Consider using Seeking Alpha's ETF rating screener too, L, to help find stocks that achieve diversification into desired sectors you like. Alternatively, if you're looking for a select number of quant strong buy recommendations on a monthly basis, you might want to explore Alpha Picks. This article was written by Stephen Kress, Quant Team,